Bitcoin is the world's first perfect monetary asset. And by perfect, I mean hard capped at some fixed amount. Every other monetary asset you could use as a long-term store of value has some leakage or inflation in it, whether it's gold or silver or real estate. So the ideal perfect monetary asset would be some fixed amount of something for the next 1,000 years or 10,000 years. And so Bitcoin's the first thing like that. Why does it go up in value? It goes up because the supply of dollars is increasing 7% a year for the past 100 years. And that means the dollar loses 99.9% of its value over 100 years. So the reason that the value of scarce, desirable stuff goes up is because it's difficult to manufacture with a factory. If a factory can make it, the price is going down. If a politician can print it or declare it, the price is going down. If technology or if a robot can create it, if a technologist can make it cheaper, if it's subject to Moore's law, if the AI can spit it out, you don't want to store your monetary wealth in anything that human ingenuity or politics creates more of. That just leaves you with things like Da Vinci paintings. The currency supply is increasing. There are certain scarce, desirable assets that are not increasing very fast. Bitcoin is hard capped. It's not increasing at all. So why is it going up to 13 million a coin? Well, for the last 10 years, it's been appreciating 60% a year on average. For the past 4 years, 60% a year. The S&P index is increasing about 15% a year for the past 4 years. The money supply, the dollar, is increasing somewhere between 7 and 10% a year, maybe 10% a year for the past 4 years. So the thing that's going up a bit faster than the inflation rate is a diversified portfolio of high-quality companies like Tesla and Apple and Google and the like. But companies have attack surfaces. So companies have counterparty risk. They might get sued for antitrust. China doesn't like NVIDIA. Europe might tax Apple. The US government might sue Microsoft. And then maybe it just gets unlucky because of a war or famine or a hurricane or bad weather. Okay. Or maybe you have a great company in Russia and the currency collapses like it did in '98. And so things that are in the real world, things that are subject to political fate or weather or war or famine or competition. What is Bitcoin? Well, it's not in the real world. It's not a company. There's no counterparty risk to a company, no counterparty risk to a culture, no counterparty risk to a currency, right? You're stripping away counterparty risks. And so when you strip away all the risk, you get pure digital property. Why is it going to go up? It's going to go up because capital is flowing from the more entropic state, from the state of anxiety and risk and confusion toward the more ordered state, a less risky state. Think of water at the top of a mountain. Why does the water flow downhill? It's flowing downhill because of physics, because it's a lower energy state for the water to be at sea level than for the water to be 1 mile up. Why is money flowing into Bitcoin? Well, I'm going to take all your money, put it in random countries and random banks in Africa. And then I say, okay, it's Monday morning. Your money's in random banks and random countries in Africa. Would you like to bring it back to the US? You're going to bring it back to a place you feel comfortable. Capital flows to security. It flows to where it's treated the best. And so money is flowing. It's flowing into Bitcoin because it's running away from Russia and it's running away from China and it's running away from Africa. It's even running away from Europe. So capital is flowing into Bitcoin at 60%. The traditional method of storing your long-term capital is the S&P index is 15%. What's going to happen is that more and more capital is going to flow from the 15% to the 60%. You got $1 billion of warehouses built in 1980. They're rusting. They're falling apart. You're going to have to rebuild them. You want to rebuild them for another 40-year run, or you want to put it into Bitcoin, right? So money flows from the past to the future. Money flows from physical to digital. Money flows from high risk to low risk. Money flows from insecure to secure. Money flows from the east to the west. Bitcoin simply represents the highest form, the least disorderly, least risky form of property right. So what do I expect? I think Bitcoin, as it gets bigger, it goes from 60% growth rate to 58 to 55 to 52 to 50 to 48 to 38 to 35 to 33. And the traditional world, the $150 trillion of traditional equities, they'll start to incorporate Bitcoin, but they'll also struggle with all the entropic risk and competition and weather and war and famine. Bitcoin's going to become half the size of equity. It'll start to head up toward the size of equity. And then there's $300 trillion of fixed income, bonds, preferred stocks, ETFs that hold fixed income instruments, currency equivalents, sovereign debt. So as people get more comfortable with Bitcoin, they're going to move money toward Bitcoin. And what do I think? I think over 21 years, Bitcoin goes from 60% ARR down to 20% ARR. And if you blend it, it's like an average of 29% ARR. And if you crank 29% ARR into a 21-year model, that takes you from where Bitcoin was, which was about 55,000 a coin in the middle of 2024. It just climbs up with some volatility. It surges up, it crashes down, it surges up, it crashes down, and it climbs to 13 million a coin in the year 2045. And as it climbs, it becomes a greater amount of the world's capital. Instead of being $2 trillion, it becomes $280 trillion. But the amount of wealth in the world goes from 900 trillion to 4,000 trillion. And there's a lot of bonds, and there's a lot of real estate, and there's a lot of equity. And it's not like Bitcoin eats everything. It's just like Bitcoin goes from being 1/10% of the world's wealth, to being 7% of the world's wealth or something like that, And the big idea is half the money in the world is just long-term capital. People just want to preserve their wealth. It's the greatest use case in the world is just wealth preservation. I just want to take my money and I want to put it in a savings account in cyberspace, and I want to buy an asset that no entrepreneur can make more of, no AI can make more of, no politician can make more of. I want to know I'm buying 1/21 millionth of all of the money in the bank for the next 1,000 years, and I don't want a management that can kind of freeze my assets, steal my money. You're not going to get rich by holding currencies in your pocket. You ought to minimize the amount of currency you hold. But if you want to get rich, the time-tested way to get rich is you buy scarce, desirable property, and that will preserve your wealth. The way you get wealth, the way you create wealth, is you borrow the money from the bank to buy the property. If you want to stay rich, then you want to buy something that's going to appreciate faster than the monetary inflation rate after taxes. And that means that's why you can't store capital in bonds, because no bonds will give you more than the inflation rate after taxes. Bitcoin is plus 60% a year for the past 4 years. The S&P is plus 5%. The Mag 7 is like plus 25 to 30%. This is not complicated rocket science. The monetary inflation rate, it feels like it's 10% to me. So if you don't care about money, then I guess it doesn't matter. But if you care about money, if you want more or you want to keep the money you have, the hurdle rate is 10%. And the conventional approach is you buy S&P 500 index and you beat it by a little bit. The entire asset is very exposed to macroeconomic volatility. I think it's a feature. I think it's what makes it the greatest asset in the world. I think that we're beyond the point where it's going to fail. It didn't fail. It succeeded. Is it going to be banned? No. The big three is, will it be hacked? Will it be banned? Will it be copied? And the answer is, it hasn't been hacked. It isn't getting banned. It has been copied, but it's winning. The smart money in the world has decided this is the winner. Bitcoin's just a free market. It's the freest market in capital in the world. And the definition of free market is anybody can manipulate it any way they want until they run out of money. So if you have $100 billion of Bitcoin and on Saturday night you want to sell all $100 billion of Bitcoin, maybe you can do it. It's enabling you to do it, right? Bitcoin's volatile. It's always going to be more volatile than the S&P. The S&P's vol 15 and Bitcoin's vol 60. But the reason it's more volatile is because if you had $1 billion and you were in Japan on Saturday night and you just had a panic attack and decided the world's going to plunge into chaos, and if you wanted to take a $10 billion or a $100 billion short position on the economy, the only way you could do it was Bitcoin. But Bitcoin would give you not just the ability to short the market, it would give you the ability to short the market in 1 minute. It would give you the ability to short the market with 100x leverage or 50x leverage or 20x leverage. The truth is, on Wall Street, normally you can't even short more than 2x. But Bitcoin is really providing everybody in the world with the greatest degree of liquidity and leverage and credit. If somebody wants to panic sell $1 billion of Bitcoin on Saturday night because they heard that missiles got launched, because they saw it put on X from a stupid troll account. You know, your position is either you're not allowed to do it, or your position is you're free to do what you want. There's a phrase, a fool and his money are soon parted. If you're stupid enough to sell $1 billion based on a troll account because you saw a meme, you're just going to lose the money. You won't have the money. And so the market gets smarter. And what I would say about all this volatility and all this trading is the very intelligent capitalists that make the right trades are getting richer and more powerful. And the really stupid capitalists that make the wrong trades are getting poorer and they're getting less powerful. And the real beauty, the insane beauty of the Bitcoin network is it is the world's greatest free market. I mean, I wonder, is there any product in the world that is traded globally 24/7, 365 in multi-billion-dollar components where everything is connected to everything all the time? And so I don't know that there's another free market to buy and sell things with or without leverage at any point anywhere that's greater than Bitcoin. See, the thing is, you can manipulate the price of a stock at 4 p.m. in the evening knowing that no one's going to touch it until 9:30 the next day. You can't really do that with Bitcoin, because if you manipulate the price at 4 p.m., you would be the loser because people would be buying it cheap, you know, in Japan and China and Europe while you're asleep. My advice for people is Bitcoin's digital capital. In 100,000 years, we finally came up with perfect money. Every economist that ever wrote on the topic for, you know, thousands of years, they never had it. Satoshi created it, brought it to life. If you don't understand what Bitcoin is, if you don't understand why it's better than seashells or buying NASDAQ stocks, or why it's better than investing in bonds or currencies or real estate or random artwork, don't put your money in it because I say you should. Put 100 hours into it, you know? You put 100,000 hours in, you know, trying to actually make money, and you'll probably die poor or die without any if you don't ever figure out money, because the system is constructed to take all your money away from you unless you get really smart about economics. Nothing done or nothing meaningful is achieved in life without a 4-year commitment, a 1-year commitment, a 100-hour commitment. But, you know, Bitcoin is the idea that $2 trillion worth of smart money capital has decided upon after a vigorous, bitter debate for 15 years. 15 years of a lot of very smart people going back and forth through the block size wars, going through the crazy years of the last 4 years. Bitcoin is just a crypto network for people that would like to keep their money, right, preserve their capital. If you're the expert, you know you're the expert, you should do your thing. If you're the world's greatest podcaster, you should do your thing. If you're a musician, do your thing. If you're a football player, do your thing. That's all great. The thing that Satoshi created was a way for you to keep your money. The more people that learn about it, the more of us get to keep our money. And every single time an intelligent person joins the network, they make the network that much more secure, that much more powerful. They de-risk it for everybody else, right? And so join the team. Our objectives are to make you live, you know, happily forever after, and hopefully make you wealthy enough that your kids are wealthy. You have a commodity that returns higher than the S&P with higher volatility than the S&P. So you have 60 vol, 60 ARR on Bitcoin going for many years versus 15 for the S&P. Every other commodity, I mean, real estate, art, gold, it's 10 vol, 10 ARR, 7 vol, 7 ARR, 5. This is a global monetary asset. It is worthy of attention. If it's not going to zero, it's going to $1 million. When Bitcoin's $1 million a coin, I bet you I will probably buy $1 billion of it at $1 million a coin, probably in 1 day. And when it's 2 million, I will probably be doing it again in 1 day. And when it's 10 million, I will be doing $1 billion or more in 1 day. The big idea here is there's $450 trillion of assets in equity, real estate, fixed income that store value assets in the 20th century economy. There's $2 trillion in Bitcoin in the 21st century economy. If I give you $1 billion and you invest in a diversified portfolio of African real estate companies and equity investments, that's a very inefficient portfolio. If I take the same $1 billion and I pull it into Bitcoin and I eliminate your counterparty risk to every country in Africa and every company and every currency in Africa, that's a much more efficient thing that gives off energy. There'll be a point when Bitcoin is a $300, $400, $500 trillion asset class. There's still going to be people that are like, I'd rather buy my government bond bonds,
Right.
or the government told me I had to capitalize my bank on the bonds. If the S&P is 15 and Bitcoin is 60 to 60, I think the Bitcoin is tracking toward the S&P, and the S&P is going to track up because the S&P companies will flip the whole Bitcoin. I would just focus people on my 21-year forecast is it goes up 29% ARR on average, which means it's 60% grinding down to 20% over 21 years, and it grows to 13 million a coin, and it grows to 280 million. And of course, there's plus or minus rails. There's the bear case, and then there's the bull case. I'm focused on the 21 years because I think that's as much as any politician, any business executive, any normal investor can manage. And I think 21 months is too short. I think a lot of people fall into 21-week, 21-day, 21-month trap, and that paralyzes them. It's like Dave, I missed Bitcoin. He missed Bitcoin at 20,000, 40,000, 100,000. And my response is, Dave, you could still buy it for less than $1 million. What's your issue? The reason Bitcoin rallied past 100,000 is because Jerome Powell on stage said to the world, Bitcoin does not compete with the dollar, it competes with gold. Guess what? Gold is not currency. Once you realize gold is a capital asset that's like 7 ball, 7 AR, 7 ball or something. It's a garbagey one. You're better off to use the S&P index as a 15 ball capital asset, but Bitcoin is a 60 capital asset. You just really have to understand Bitcoin is digital capital. If it's digital capital, it's going to compete with bonds. It's going to compete with gold. It's a better settlement network. It's the best capital. It is emerging as the world's reserve capital network. You're wasting your